You're watching the Bold Business Report.
Good day. This is DK Bold with your Bold Business Report and today's Wall Street Journal update. Now, right on the front page today, we have the Dow breaks through 11,000. Big old booyah for that. Is this the sign of recovery that we've been looking for? Well, in my opinion, it's a little too early to tell, but we'll take all the good news we can get at this point. Now, the Dow has been up for 23 days out of the past 30. And this rise is not coming from individual investors, but from hedge funds and professionals, which could have some interesting signs going forward. Let's keep our eyes open on that. Now, second up on the front page is the U.S. is pushing for sanctions, but China, they're holding back. Now, President Obama and Chinese President Hu Jintao meet, but they differ on how to apply pressure to Iran. Now, our national security chief, Jeffery Bader, he said that China is prepared to work for us, yet the summation that came out of Beijing kind of tells a little bit of a different story with much more focus on diplomacy versus sanctions. Now, a key piece to all of this, and something that is often overlooked, is currency. So this creates a complication because of the artificially low value of the yuan, which is the Chinese currency, and it's increasing or raising the prices of all of our U.S. exports. Now, Timothy Geithner, because of all of this, is still handling China with kid gloves so that we can get these sanctions and help with them on this and handling Iran. So how this all plays out, well, hang on. Could be interesting at best. And there's a little more news coming up about China that will add to this. So second up, moving on to the marketplace section, Alcoa sees slight gains in the economy. They have posted narrower loss, and they're looking at possible improvements this year. Now, they've historically had concerns over the drawdown in manufacturing and overall high unemployment. Now, the interesting thing is they do expect clarity to come from earnings week, if you will, from several top companies. Now, just in a historical piece on Alcoa, last year they idled a quarter of their capacity and cut thousands of jobs simply because of low demand. So hopefully with some of the other signs in the economy, this could be good news for aluminum and Alcoa overall. Now, you guessed it, I mentioned it earlier, China's right back here in the news. China broadens oil reach with a deal. So demonstrating an increasingly assertive strategy to secure energy resources around the world, they have made a deal with ConocoPhillips where ConocoPhillips agreed to sell its stake in Canadian oil sands project to China Petroleum and Chemical Corporation for $4.65 billion. Now, this helps U.S. firms or U.S. oil companies financially, but my question to you, and something we'll definitely be keeping our eye on, what's the broader implication of China making several deals? Because this is by far not the only one they've made with other oil companies, including ConocoPhillips, across in all sorts of world oil exploration projects. So definitely keep your eyes open on this. Now, moving to our third section, money and investing. The FDIC plans to keep up its insurance for business. Now, they're set to extend a program providing unlimited deposit insurance for certain business accounts. Now, this insurance is for certain no interest or very low interest types of accounts, and it's designed to provide parity for smaller banks, because in a runoff or if a worldwide event caused people to want to move their money, the small banks would literally dry up and go away. Well, by having this insurance, people will be less likely to do that and allow the smaller banks and independent banks all across the U.S. survive and thrive through a challenging economy. Also moving on, we have Morgan Stanley's trading push. Now, boy, that's much much upheaval over at Morgan Stanley, changes afoot, as you might say. At Morgan, over the past year, they've brought on 350 new people. They replaced 2 long-term executives, and they even tore up the org chart on one of its divisions. Now, customers are remaining patient with them because they really need them, and according to the CEO, James Gorman, they must execute. Now is the time. And believe it or not, turmoil is nothing new at Morgan Stanley, but they must heal the rifts between many of their different divisions and many of their groups. And again, like James Gorman said, now is the time to execute. So if you're with Morgan Stanley, watch out. It's always going to be a fun ride. Now, adding on to the end here, I wanted to definitely bring up small business in the small business section, because this is so key to the entire Bold Business Report. So this topic is, for entrepreneurs, sharing isn't always fun. Not quite the sharing you might think. So if you're a small business, you need to lure or keep good hires. Do you pay them in equity in your company? It's a double-edged sword. Giving away equity means diluting your potential reward. So in some cases, when you are making money and the profits continue to grow, you as the owner, you get your reward. Now, if you've shared that equity, you're also sharing that piece of the pie with everyone. So here's the other piece. What do you do if someone you've given equity to, they have partial ownership of some variety in your company? What do you do when you no longer want them, or you no longer wish for them to stay on board or be retained? That can be a sticky situation. Yet in all of this, there is still the play where competing with large companies that have virtual limitless salaries, if you will, the smaller companies can compete by bringing in the best talent and saying, hey, we can't pay you the large salary now, but we can pay you in an equity position. Well, that concludes our Bold Business Report and Wall Street Journal update for today. Please throw your comments down below here. I also encourage you, as always, to find your passions. Take care. You have another great day.